And we're just starting up to more people. Don't share. Hello and welcome. Thank you for making the decision to be present for the second week of our inaugural Chart Your Financials 7-week workshop webinar. I'm your host, Dr. Pamela Ellis, and I am licensed and appointed with World Financial Group and WealthWave as a financial and health consultant. I work within our network of more than 100 financial and health organizations. And I'll just go to my slide here. Many of us have come to know at various stages of our lives the programs, plans, and products that have provided health and life and retirement benefits for those we know and love, our families, businesses, and community, and with many of the benefits that we also enjoy. Wherever we are in life, we continue to ask ourselves important questions. Questions that encompass our ability to have a prosperous life, quality health care, and an honorable legacy for family and charitable organizations. Today, and for the next additional 5 weeks, take up the challenge to prioritize 1 hour, 60 minutes each week on Wednesday to complete the WealthWave 7 Money Milestones system review with us. Write down your questions in the Q&A section and we will work through them. Stay tuned, stay positive, keep your eyes on the prize for personal development, professional development, and focusing on mastering your highest human and financial potential toward achieving your various life goals. The WealthWave 7 Money Milestones were developed for individuals and, by extension, families and businesses, equipping all who want to achieve financial security, independence, and the ability to navigate life's financial twists and turns with a solid education roadmap foundation. Within our Money Milestones company, there's a vision and a system for education, financial strategy, and entrepreneurship. Last week, we covered the importance of a financial education and how working with a trained and licensed financial professional provides you with industry standard contracts and education resources, in addition to the foundational financial concepts that are found in our How Money Works book series. I also provided the 50-30-20 budgeting system and information on how to calculate your financial independence number by email as well. And so for those just joining us today, I will forward this information to you by email. I encourage everyone attending our webinar to make an appointment for a complimentary financial needs assessment with me, or if someone else, a financial professional, invited you, make an appointment. So there's no fee for the complimentary professional financial needs assessment. Be a wealth builder with us. Begin the process by setting up a complimentary assessment, which is foundational for summiting the pinnacle of the WealthWave 7 Money Milestones accumulation process, as you can see here. As wealth builders, we are today at milestone number 2. And last week at base camp, or milestone number 1, we reviewed the process needed to envision the achievement of financial goals, and which was a financial education working with a trained and licensed financial consultant in order to know the concepts, the tools, the resources, and to organize to move forward in your financial lifetime journey. This week, we want to know about milestone number 2. What is it, and why is it important for all wealth builders? So we will be going over that in detail today. And next week, on July 16th, we will be going over the emergency fund milestone with case examples. On July 23rd, we will cover debt management. On July 30th, cash flow. On August the 6th, we will cover build wealth. And on August the 13th, we cover protect wealth. All of the money milestones are interrelated. So if you miss one of our group webinars, I can personally review the milestone you missed with you, as well as send you our book, which provides information as well. What does proper protection mean? Proper protection means when life's unexpected or unwanted moments happen, you are financially prepared for it. And you can pay for all of the expenses without the need to ask family, friends, public, who might not have the money or might not want to provide the money. So that is why it's important to have proper protection. With a small monthly payment, you can have a large lump sum payment available to you with various forms and types of what is known as insurance, which is pooled risk, and it can be obtained to lower your exposure to not having enough finances to cover inevitable expenses. What is the right type of protection for you and your family members or business? The right type of protection depends on your goals and your financial situation. So I'm going to go to the slide here that will show you this information, just having a little bit of stickiness to my slide here. So, in other words, you need what's considered a lifetime a lifestyle lock. And we understand that we have faith and we want the good in our lives, and we want freedom, and we want fulfillment. Basically, a lock on our lifestyle. So here we think about the fact that when we finish our education, our high school education, our college education, we are thinking that we want to live our best life and have a honorable legacy. So you've done everything right, you've gone to school, and now you're looking to live your best life. And we know that it's difficult to do that in many cases because of the job market, and you see that you're not employed right away. You might be within that group that doesn't get that job right away, and you may have to wait. And how's that going to affect your ability to live your best life? It's going to be more difficult. So you really have to find ways to have income and to protect your income once you do get income, and to protect your savings so that you can make, usually that first big purchase would be a car, and you need to have car insurance, and you have to look at that, how that affects your budget, your income on a monthly basis. And then you're going to have a house. Are you going to rent, which most young people do? I do know of cases where people do purchase homes right after they complete their college education. And if you have a down payment, you're going to have to be able to know the different types of insurances with mortgages, and people don't understand the different types of mortgage insurance, whereas you have the private mortgage insurance, which protects the lender. It does not protect the person who is purchasing the home. So that would be a mortgage life insurance. And then you have that protection in place for the heirs. And also, if it's a permanent life insurance, it will provide cash value to you and many other benefits. So it's important to understand how to live your best life from the time that you're very young up until the time you go through your total career, decades of a career progress up until the time you retire. And you want to have time to get away. You want to budget for your getaways as well. So vacations and other types of enjoyable experiences. So this is the question with protection. How do you get the lifestyle lock of your dreams? And you want to protect your income and protect your savings. And that's what milestone number 2 is. Okay. And you want to increase your income the whole time you're on your lifetime financial journey. So last week we talked about the 50-30-20 budgeting rule system. And I gave everyone an Excel spreadsheet, and it's interactive. You can just put in your numbers on a monthly basis. And we talked about June as compared to what you're going to do in July. And every month, you want to see that you're lowering the amount of money that you're spending on debt and on taxes, and increasing your savings and investment. And you want to see that the trajectory and your charting is increasing over time. So we're finding out ways to cut our expenditures so that we can save more and get higher returns with each decade of life, preparing us for the time when we reach our financial independence number. We talked about last week about how we can save money by starting early. And that's a part of the protection process. So if you start at 20 years old saving to get, as an example, $1 million, you only have to put $113 a month into the account, a 9% account, which is compounded monthly, getting an average annual interest rate of 9%. So, but if you wait until you're 40 years old, you have to put $731 a month into a 9% account in order to get $1 million. So you see, you have to save income early. And that's why it's important to get the job as soon as you can. And I know in our families, we have family members, ourselves, we're going through struggles, and people don't have the monthly income always, but you have to find a way to get that monthly income, and then you have to protect it. So, and have your networks, which is really good as you apply yourself to get your resumes out there, and you're also working with career fairs and unemployment. You're doing everything to increase your income with your savings and your investments. And here's another example. You're making sure you don't have your money. We talked about this in a 1% account over your lifetime, because many people do. There's $10 trillion in 1% accounts right now in the United States instead of 9% accounts. So we know about the different account rates, and we help to make sure that our clients are in the right vehicles. Here's an example also of starting early to protect your money. Here's Sarah. She started saving at age 22, and George started saving at age 30. So you see, they both put in the same amount of money, $333 a month. And this is, in our industry, people should have discretionary income. This is like an average amount with an average salary that people should be able to invest and save. $333 a month. And so this is a good amount. And so we talk to people about how to allocate that amount in different savings and investment vehicles. And we see here that Sarah, she was able to stop saving at age 30, and with a 9% account and with the compound interest on interest, she had more money than George, and he stopped after age 67. He put that amount of money in for 38 years, and he had less money. So that's why I cannot stress enough, all the people that are in their 20s and people in your family, your children, your daughter, your son, all the people that you talk to in community, and as well as yourself, you got to start. You got to start. Okay, July 2025. You need to get the WealthWave 7 Money Milestones in operation. And these are the threats, and we talked a little bit about it last week. If you wait, that's a big threat, because it's our favorite form of self-sabotage, waiting. So, you have to get this done. And we talked about how you lose money, and so you got to find ways to reduce that, and that's what we do. We help you to find ways to not lose money, to prepare for your taxes appropriately, and to lower your tax ability to lose money, which is one of the big places that we have examples of how people lose money on taxes. And I can go through some of that, as well as with inflation. Here we see the key concepts and strategies that we help you go from where you are now to where you want to be in financial services. We help you to identify your goals, and then we find ways to protect your income and protect your savings and to help you to save more. So as we began with the example of just getting out of college and buying your first car, you know that it's required for you to have car insurance. And your homeowner's insurance, we talked about the type of mortgage protection that's for the lender as opposed to the other type, which is better, which is for the person who is the policy owner. So you want to own a policy that would allow you to be the beneficiary and also your heirs, as opposed to the type where you have to, there's different types of mortgages. Some where if you are just going to put down 20%, then, or less than 20%, then you have to pay for PMI. So that's what you don't want to have to do, but if you have to, you have to. But so that is what you need to talk about as well. And so all the types of insurances that I've outlined here, there's so many. It's just to get that life lock that you want, that lifestyle lock, to make sure you have all of the bases covered so that there's nothing unexpected. And flood and pet and security systems, we help you. We do referrals with service providers, with many of these types of ways to protect your lifestyle as well. In addition, the major protection of your life, we have the index universal life insurance, the term life, the whole life, as well as all of our healthcare plans, which include Medicare, individual group health, ACA marketplace, Medicaid, long-term care insurance, disability insurance. If you lose the ability to go to work, this is really important to protect your income. Disability insurance will provide you with a monthly benefit during the time that you are unable to work due to disability. And this is really important, as well as hospital indemnity, which provides cash payments to you if you're in the hospital, and dental insurance is another way that you can protect your income from the high cost of expenses. So working with us, we can identify savings and pension and 401k, IRA, annuities, and investment ways to protect your money. And we provide information on how to have a self-pension as well. So it's real important that you can do this with a permanent life insurance, and how we structure it with specially designed insurance contracts. So not everyone has a pension. So this is a new way that the insurance industry has provided for people. So we work with you to help you in these ways, as well as a foundational retirement, estate, and legacy plan way to assist you. So individual and business financial services, you start with a financial needs assessment or analysis and the goal setting. So we have a way to help you look at your entire life and structure your journey. So that is what a financial services professional does. And we help you allocate, show you different places that you can decide to allocate your money, and give you customized recommendations and implementation strategies. Only 59% of Americans have life insurance, and about half of those are underinsured. So here we see a life insurance need cost assumption paradox. The same people who underestimate how much life insurance they need have a tendency to overestimate how much life insurance will cost. So that's why you need to get information for your particular financial situation and put the proper protection in place. So I did say that permanent life insurance is one of the types of life insurance that provides many benefits that people don't know about, and how the benefits are a strategy to protect your income and your savings and to build wealth. So you're not going to lose your money in the market. Your principal is protected. You have the ability to have long-term care as one of the features of permanent life insurance. There's tax-free growth, and there's income that's tax-free, and there's a tax-free legacy to your heirs. How much life insurance do you need? So everyone's situation is different, and we look at various factors. We look at your age, your debt, your income, your health, how many dependents you have, as well as your business. So permanent life insurance is one of the basic categories, and temporary term insurance is also one of the basic types of insurance. And here you see, generally, we're talking about 10, 20, or 30 years. And at the end of the term, you no longer have that coverage. And term is used for various reasons. Because it is low cost, it's a good starting point for people at the beginning of their career. And so you see that it could cover your mortgage for 30 years. That's one of the things. If you do purchase a home, you should have your mortgage life insurance, and that could be your term life. It could be used for the benefit of the fact that if something happens, you need coverage for your family, and you want to provide a certain amount of money for them in the event that you transition. And so some of the terms now also have some of the living benefits as well that the permanent. So it can be used to pay for all the things that you need to pay for, have a large amount of money there for your family in the event that you transition early. Permanent life insurance is better. And I like permanent life insurance because it's there for life. There's not a term. And it has more benefit than the term. So you can structure it so that you can have supplemental retirement income. So you're saving for your retirement when you're in your 20s, which is something that's good to do. And also you can accumulate that cash value, which you can use for many reasons. You could use it for a down payment on your home. You could use it for retirement payment, for long-term care, as well as putting down a deposit for a business. So there's a lot that can be done. Also, the living benefits are normally with the permanent, but some term also has some of these same benefits. So you have to look at the policies that provide these as well. So they're affordable and some cost nothing to add. So this gives you your critical illness protection. So you can collect a portion of your death benefit to cover expenses when you're diagnosed with heart attack, stroke, or cancer. So we know that the rate of these diseases are very high. So everyone really needs critical illness protection, as well as the chronic illness protection, where you can access a portion of your death benefit to cover expenses when you're diagnosed with ALS, diabetes, Alzheimer's disease, as well as other diseases. So here, to summarize, life insurance coverage for life, that's permanent life insurance. And you have an optional rider, the long-term care, that you do not have with the term. You also have cash value as a part of your policy, and your premium is flexible. So you see, as I mentioned, you can use that money with a permanent over time after you allow the money to accumulate for years. Just look at your account to see how much you have. You will have enough money to pay for a car, to pay for vacations, weddings, and retirement. So these are some of the ways that people use insurance, and they protect their income, they protect their savings with this type of policy. So we use our tax strategies to keep our money in retirement, and also to not pay money to the government as much as we would otherwise. If we don't know about how money works, we're going to pay a lot of taxes. So we have examples on that as how you can keep from paying the highest amount to the government. And we can go over some of them. And as well as to leave more money for your children and not be taxed at the highest rate. So here's an example here. So if you have $10,000 at age 29 and you're earning a 9% annual return every year, you'd have $250,000 when you reach 65. So the type of account that you have your money in is going to determine how much taxes you're going to pay. And this example here, it shows you that if you are taxed we're paying tax on the initial $10,000, means that the principal will be taxed. And then you won't have to pay the taxes when you are ready to get a distribution. So this is the tax never accounts, like a Roth, where you're not taxed on the earnings and distribution. So you are taxed upfront on the $10,000, but not on the $250,000. So that's important to see here how that works. So, and another example that I use is that if you have $1 million saved up when you are ready to retire and you're in a 30% tax bracket, they're going to take 30% of your $1 million and you only have $700,000 left. So you don't want to be taxed where you're paying $300,000 to the government when you're 67 years old. You'd rather pay the low amount that you put in at the beginning rather than on the heart. So there's different types of vehicles where you're going to be taxed now, taxed later, or taxed never. So we identify the different ways and strategies that you can use to allocate your assets. The tax now strategy, the tax later, and the tax never. So we have a document that we use to help you to identify what your goals are, your short-term, your midterm, and your long-term goals, and to ask financial questions to help organize your thoughts and also your income and your expenses. And here's my contact information. So we are out in the media in a very detailed way. We work with all of the national media. Our book, our podcast are featured, our videos, our website, and in-person consultations that we provide, our webinars as well. So that is the structure of the 7 money milestones, milestone 1 and milestone 2. And I'm going to look for our questions now to see what questions we have. Okay. So does anyone want to have anything answered? Any questions right now? Please add them to the chat. Okay. Okay, so I don't see any questions right now, but I want to thank you for joining us for the second milestone presentation. And I look forward to milestone number 3, our conversation, as well as the conversations that we will have when you contact me and we talk. We have a conversation and have appointments to help you get started with the WealthWave 7 money milestones. I'll see you next week.